Okay, good morning, everybody. Welcome to another Engineering the Markets. Happy Monday to everybody joining. And as always, my name is Jared. It is December 19th, 2022. And we are sort of entering the end of year preparation. We saw some rebalancing and the option expiration along with a triple quad witching on Friday. The S&Ps also had a dividend payout. So there's a lot of just general repricing last week. You pair that with the actual downside volatility of what we received from the FOMC on Wednesday and the follow through that we got Thursday and Friday. A lot of underlying names in the overall indices were seeing precipitous selling, and it was fairly dramatic in terms of there wasn't quite significant recoveries on the session. The bounces were pretty muted outside of Friday's sort of hedging, expiration and a lot of the downside puts kind of being closed out. All in all, it was a fairly bearish week. Now, as always, I like to start off with the S&P index and look at the SPX expected move. The reason being is, did the option market know that this type of volatility was to be expected, and did it kind of get it right? Last week, we saw that on Tuesday, the preparation into the FOMC and the actual CPI release, we did hit the upper bound of the expected move. You would argue that that's sort of a breach of expected move. But as we got into the actual meeting, and then of course the actual downside reaction from the meeting, we saw that that was essentially the highs for the session, along with the highs of this potential bear market rally. We might be seeing sort of the peaking price dynamic for this particular leg, of which we'll have to evaluate some new setups and opportunities on the downside. But additionally, when we saw the selling, the expectation of downside was somewhat advertised by the SPX. And we knew that at worst, if the market was going to tag the lower bound of the expected move last week, we were looking at about 38.07. Did we get to that exact price? No. We hovered slightly above. And then throughout the ending afternoon session, there was a larger hedging rally where a lot of downside put protection, or just people, selling into that pressure of the downside move, start to cover out, and of course the bounce starts into the afternoon session. So all in all, the expected move was wide last week. It knew volatility was coming. They priced about $127 expected move. Our largest move was actually to the upside, and that was right before FOMC. The CPI did produce a 166-point move, essentially breaching the upper boundaries. But the actual move from the close of last Friday to the close of the Friday that just passed was actually only about 82 points. So all in all, the move we're seeing is simply because we're traversing from a relative high all the way down to a relative low. And that extremity feels quite extreme simply because there was a markup before the drawdown. The actual close to close, we did decline last week. It was a bearish week for the S&P. You can certainly see that just in the structure of the candle. But the deviation from our expected move was in line with that. We didn't necessarily have a close outside of expected move. And the overall range of the week was slightly higher than double, since we were able to traverse high to low. So These are just some quantitative notes. The idea is that last week was supposed to be volatile. The market did indicate a lot of that volatility and some of the key levels to kind of pay attention to. And of course, we did break some of the actual price supports. That is going to be in focus as we look at this week's expected move. For this week, we can see that the expected move is back down to about 87, 88 points. With our close of 38.52, we're looking at 39.40 to the upside. Pretty important price as well for some of the tradable products. This would be essentially a VPOC for the SPY and something like ES futures, and 37.65 to the downside. Essentially, if we continue to sell, that's sort of where the market expects that volatility to head. And what's notable about this particular price is we're actually starting to get near a full gap fill. This was the breakaway style gap, and essentially a trap gap in regards to a selling session leading into a breakout and buying session with a gap in between. So interesting price structure that we're starting to repair. We are entering into this price region, but all in all, I would expect some counter move as we're starting to see more defense of previous balance ranges and potentially some previous support structures before we were trapped inside of that range. So some interesting notes for today is in regards to what stocks to potentially be focused on for our short-term trade. Maybe starting to look once again at some of the potential sector rotation coming into a new year. We'll probably do that a little bit more Tuesday and Wednesday of this week, along with the type of trade activity that might be in focus for the week. You know, last week was opportunistic simply because the market was single directional. As soon as we topped out, every single session happened to be, for the most part, a downside session. There was, of course, volatility on the FOMC, but all in all, most days you were either short biased or you were very careful bouncing or picking lows for some sort of bullish trade. For this week, I think we could potentially anticipate some secondary recovery trades. For one, the idea that this range that we're leaving in the S&P, and I'll start to just kind of focus in on what levels to maybe focus on for the week. Let's go ahead and do like a 30-day. That should cover everything. So, you know, obviously the decline is in focus. That was certainly a steep decline for the market. But like most things get oversold. They often hit sort of secondary levels, and oftentimes that's how we get our back testing scenarios where the market is inclined to do a bounce or something more significant than previous low to high type trades. But those back tests are simply testing behavior. They're often looking to ensure that the market is ready to advance in one direction or another, especially after seeing something like an extreme type move. So first and foremost, the easiest thing to notice here is what range are we leaving? And at the most extreme, it was approximately 390 SPY. That's where we saw a little bit of challenge before seeing our Friday sell session. And that is where we actually happened to push into on the Thursday session before seeing additional downside. Secondary level, I think, would have to be VPOC. And while this looks to be far enough away from price and maybe not worry about for the week, the SPX does indicate that this is within the expected move. So technically, if I'm looking at volatility study, the S&P does have potential to bounce up into and even pierce something like 394 to 395. Now, along with that note, there was some dividend payout last week on the SPY. This is the ex-dividend date on 12/16. So you might have noticed a little bit of that repricing. Usually it's going to be apparent in pre-market, and usually there's a deviation between what the SPY has priced and something like ES futures, which aren't necessarily paying out a dividend. But most traders will simply look to mark levels and use some of the technical structure in the futures product until that event is over. So what we see here is similar in regards to the range being broken out of. Obviously, a little bit less steep due to the lack of additional price downside based on a dividend payout. But all in all, you'll notice the ES futures are starting to showcase what some of the back testing might look like, especially on that Friday session. We did see the morning trade actually run into the lower boundary of our balance range, or it's mostly a trading range at this point, along with the potential for a push into VPOC. And this is simply a return to value. You know, if the market did wish to sell, but maybe isn't quite ready for that downside advance, especially into the end of the year and a little bit more potential recovery off of something like a Santa Claus rally, those price levels are still in focus. We're not so far removed from them that I think they should be ignored, nor does the volatility indicate that it's out of reach. It's actually within the market's capacity this week to hit something like the upper bounds of about 39.50. So these are two key levels to the upside. But if we're still looking bearish, what are some things to kind of focus in on now that we're losing support, and how bad could some of this range expansion get? Obviously, a lot of our most bearish scenarios would indicate that this is the end of a bear market rally. And therefore, given how every bear market rally has performed, we would be looking at fresh S&P lows based on this rejection. For the time being, I think there's going to be some in-between trade, things that are going to have to occur before we see something like a fresh S&P low. And it goes in line with some of our previous bear market tops or bear rally tops and some of the downside reactions that occurred. Just using the most recent one as an example, you'll notice that structurally there are interesting points of recovery. For one, if we look at where we bottomed and sort of the high to low trade, there was our absolute low back in June. This is kind of when we saw the June low be essentially established, and that's a reference point for this particular rally. There was a high end, and then of course price stabilized. Trade had to occur for a couple of weeks, trapped between the highs and the lows of the current 2022 low, you know, the one that was in place at the time, and the bounce high. These are often important high to low trades whenever a market is stabilizing. Now, when we broke out from this area, and there was a very clear breakout point, what you'll notice is on the way back down, there was an opportunity for the market to bounce more significantly than we had seen on previous bounce cycles. You know, there was, of course, the head and shoulder structure that sort of triggered the sell swing. And in this bounce right here, I'll kind of focus in here, there was our trend line. Oftentimes we look at these as just moments to maybe take profit You know, if you are looking just to capture some of the downside move, but also an opportunity to maybe have a good risk to reward if the market was going to actually hold that trend line for longer than what we saw. You'll notice here that even though it is a 4-day rally, the S&P actually printed about a 5.5% gain. So there was a period of fairly bullish performance, even though, of course, it was short-lived. The question is, do we have any of that structure currently? The first thing to notice is, once again, where's our low? And obviously the CPI low from October would be in focus. From that low, what are some of the important price levels to kind of monitor? Technically, this is going to be a little differently structured than the June low because we did see essentially a bounce prior to the CPI low. And when making a fresh low, the market essentially trapped or had a lack of downside participation, lack of follow through. So the argument would be that this high somewhat remains in focus. It tends to be still an inflectionary price. Additionally, you'll notice that the width of this area somewhat reflects the high side trade that we've had so far after this has recovered. So for example, if an S&P participant were able to manage risk or essentially stay within the market during this phase of an approximately 20-point S&P high to low type response, they of course experienced a little bit of a doubling. They were able to stay in the market or enter into the market, and then of course potentially profit take into some significant upside, usually about 5 to 10% once again from the breakout points. So the question becomes, does this level hold relevance? Should we respect this level in a similar way to what we saw back in September? And do we have any reason or catalytic triggers to hold the market higher prior to some of the more significant downside we saw back in our September decline? And I think the argument here is that I definitely would keep this high-low trade and watch, because unlike the June low, we don't have the same trend lines. No matter how you mark up this trend line, even if I were to somewhat ignore CPI and swing this out a bit more, there's a breach. You know, we have breached any relevant trend line of any significant slope. Usually anywhere between 30 and 45 degrees would be relevant trend lines. So this breach is in focus, but like anything, we often have to break something like price support, hit secondary support. Usually things are coming off of highs and therefore there's more participants along the way. And then the back test scenario can play out where the market will bounce, but eventually lose value or push away from value completely, to the point where new value is not only being searched, but the ability for you to enter the market and actually participate in a trend is often the result. And remember, 4 days of decline technically isn't a daily downtrend. The idea here is that because the market has not bounced yet, our trend structure has not been defined. We're seeing breaking of support and loss of trend, but it doesn't mean we're in a downtrend yet. And that's kind of the key important thing to focus on is, what is our bounce going to look like, if any? And on that bounce, what sort of activities could we be preparing for? The idea that a back test offers good price opportunity. If you do wish to be short the market, looking for a bounce would obviously help you get into position and not necessarily chase the momentum of last week. Secondly, if we see an actual rejection of the back test, where something like a topping tail, an engulfing type structure, along with the trend definition of what sort of moving average are we starting to follow and respect. You'll notice here something like this response and some of the triggers, mostly we're hitting the 20. And that's kind of the moving average that I would expect a similar performance on, not necessarily to the penny or anything like that, but something like putting on some put premium or something like a vertical just to anticipate further downside, but getting it at a good price, not necessarily chasing lows and then having to tolerate whatever bounce comes. Of course, we don't really know the definition of that bounce. So there are some technical review items here, and I think the idea is that we're kind of just modeling this as, does it look like it did back in August and September? Are the reactions still as confirmed, even though we potentially do have to backtest? And what's our expectation? A lot of traders, I would argue, are looking at, once again, fresh lows in the indices, trying to push basically back into a period of fear or high volatility with downside selling. The argument that I'm going to make is a lot of key stocks have already kind of hit key inflections. There's only a few names that still kind of concern me in the S&P, and we would have to really start to lose participation in the stocks that have already corrected significantly, essentially seeing them flush down to something like 200 period weeklies, or even start to lose any semblance of support that they've built over the past couple of weeks. There is, of course, Apple, which I think is the one that the market may go after for a period of time. This one is starting to not only lose price support or get close to price support. I won't say lose quite yet because we're not home yet. But the downside here is that we're pretty extended still. Apple's been fortunate not to necessarily crash at the same time as other stocks, but that also means that they could go after it and basically mark it down to a similar degree as its predecessor, or sorry, its counter, or its partner, its tech partner like Microsoft. You know, similar technical evaluation and risk evaluation relative to price, but also relative to market cap. If you'll notice here, Microsoft used to be in the 2+ trillion camp. And as of today, you know, it's priced around 245 to 250. At one point in time, though, it was priced at about 216. And what that evaluates to from a market cap perspective is there was a point in time where Microsoft was around a $1.5 trillion company. So going from 2+ trillion to 1.5 was significant. Massive market cap reduction. A stock like Apple, through price, could have a similar market cap correction. And as you'll notice, the market cap of Apple today is about 2.1 trillion. So it's actually held pretty well, and it's kept the indices floating on a little bit of gravity. The idea that this particular stock could be one of the last ones to kind of see selling pressure, and what that would do if it sees a similar market cap marked down just in a period of time, essentially coming below 2 trillion and almost as worse as Microsoft, hitting something like 1.75 to 1.5 trillion. That would be, you know, sort of the bearish scenario for the market, because really all it would take is an Apple. You know, the rest of the market could be holding. A lot of equities could even be recovering still to the upside, But if Apple's going down, there really is a challenge to be bullish. It's hard to be bullish with your key stock to the downside. And then, of course, counter that with stocks like Tesla. Once again, more of a technical evaluation, but we're hitting some pretty extreme technical levels, more on the moving average approach. The market cap doesn't have the same significance here, but the speed of this sell-off was impactful. When you think about the high to low of Tesla so far, and the fact that this stock was priced at about 300 a share only a couple of months ago. At 300 a share, given that it's at 150, it means that this used to be close to a $1 trillion market cap. And it also means that throughout this correction, it's lost 500 million in market cap. Or sorry, 500 billion with a B. So that same downside pressure doesn't have to mean that a stock like Apple is cut in half. All it means is that the market cap reduction would be equivalent. And that's what's important. The weight, the significance of selling in those stocks is more impactful, because even if they're moving slower, even if their percentage drawdown is less, they still represent the same market cap weight, relative if they were to collapse. So this is what I'm kind of seeing as our bull to bear scenario for the rest of the year. And obviously, selling a stock like Apple that significantly is going to take time. But in 2023, as we kind of enter into a new year, this is one of those underlyings to continue to pay attention to, mostly because it's the last one on the list. They've gone after pretty much everything else. And while they could see significant lows being printed during a period of decline, the one that's most important from a market cap weighting perspective is Apple. So keep all that in mind as we kind of move throughout the rest of the next couple of weeks. Obviously, some sector analysis and evaluation. I was going to bring up a stock in focus from last week, and that's, of course, Cosm. I'll probably save that for tomorrow, but be aware that there were some outlier events on this particular name related to the reverse split. There was issues with settling the actual conversion of shares based around the conversion of the serial identifier for this stock. That was part of the reason for some of the volatility, along with the fact that traders take opportunity wherever they can find it. So if you're a momentum trader and there's a stock in play, algorithms and just people buying into strength can keep a stock elevated for an extended period of time. Definitely one that was interesting to watch, but there was actually more to it than just the price appreciation. There was a little bit of disruption in covering old pre-reverse split shares, essentially trying to manage the conversion across the accounts. So we'll talk about that more tomorrow. For now, stay tuned for pre-market prep. Have a great rest of your trading session. Like and subscribe if you like the content, and we'll talk more tomorrow.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope you're having an amazing morning. Hopefully, you guys had an incredible weekend. Good morning, Norm. How you doing today?
Good morning, buddy. I'm doing well. How are you? How was your weekend?
Weekend was good, man. Doing well myself. Glad to hear you're good, and hopefully everybody else as well. Um, Guys, welcome. Big thumbs up for Jared for engineering the markets as he goes over some of the stuff there with the SPY, some of the options, and what they're doing, and how we can use that for momentum trading as well. So thank you for that, guys. Let's get to it. We got an interesting week because we're pretty much starting out flat right now, and we had the last couple of 2 weeks have really been not surprising, but you've seen a nice downturn in the market here. We'll talk a little bit more about that. And there's been some really good trading that has been taking place here, especially last week compared to the week before. Although we dropped, there was not a great intraday trading here. A lot of stocks very choppy there. So with that said, guys, let's look at the overall market. What's happening coming up for this week?
Yeah, I mean, as you mentioned, we had some big pullbacks last week. And this morning, as far as news goes, all we have 10 a.m. We have the Home Builders Index. Um, I think the market we had the significant pullback overall. I think the market's going to try to see where we sit after, the additional rate hike and everything else going on. We're heading to the end of the year. A lot of times we'll find a Santa Claus rally. Obviously, have not seen that yet. You have tax loss selling that factors into things. We'll see how that plays out. So, just kind of up in the air right now. The market's not looking that exciting this morning. I'm sure that will change. Whether it's pre-market or when the market opens, we'll see. But
Yeah, yep, agree. We definitely are we'll find something to look at for sure. We always tend to find something we can trade. Guys, let's get into it. I'm gonna go ahead and remove our stuff from Friday. Control A, Control X on Dash Trader Pro takes care of that. I'm gonna add a couple of more rows down here as well. Enter, and then you could do backspace, enter, backspace, enter. You can add more rows that way also. Our gappers list this morning, guys, as you can see, we got a couple of things in the green. Not so much in the red this morning. We'll look at some of the usual suspects. Tesla. We have Baba on here as well, which is somewhat of a semi-usual suspect, not always a great one, but it's on here today alongside XBEV and some other JD and some other Chinese tickers in this gap up list this morning. With is this up 209? Is that correct?
yeah,
209%.
yeah.
Oh man, and then we got some stuff in the red, which deep into the double digits here, guys. 50%, 26, 22. So we'll look at that also. All right, let's start with the first one, guys. Up 209%. And is this any type of buyout? Is this actual trading?
No,
What's
this is a biotech, low float. Um, 12 million per trade ideas. It's around the same on other services I've looked at. They had some positive trial data come out. They also have a slightly elevated short float at 16%. So all that adding together to give them this pop, man, just be careful. If that's something you look at or even consider trading, be careful. The spread, it can be pretty nasty at times. It's trading very thin. Just not worth it to me.
Yeah, it surely is not. I, for the most part, want to see what happens later in the day, and I'm not going to care about it at the market open. I don't care what it does. This thing is, I look at this stock, and immediately my equity curve says no, don't touch that stuff. So I won't be touching it, but I would like to see what it does here, guys, because this is interesting. I mean, you're going from you were at 70 yesterday. Sorry, Friday at 60. Well, yesterday as well. Market's closed, but it's still at 70. And then today you're at 198. Can you imagine finding yourself with this luck, right? Because it's luck. You don't expect this to happen. That's got to be exciting. So we'll put it on our risky pile, but not really something you want to trade, as Norm mentioned. TERN, this doesn't look as great and doesn't have,
So another biotech
yeah.
that just popped on the gappers list a few minutes ago. I don't see any fresh news as of this morning. Maybe somebody has something out there. Same with Zyme. That's the next one. So
Yeah, yeah. Yeah, they're both up 33% and 24% in that order. But yeah, they don't look great and very, very light volume, guys. So we'll
Yeah,
skip
it's
on
just
that.
not even worth looking
Yeah,
at,
yeah.
really.
TAL is a Chinese ticker. We can find better Chinese tickers to trade. This was on our list on Friday, and I could quickly dismiss it. I mean, it's not a ticker that I am willing to have on my list. So we'll move down to what the next
I'll
three,
agree.
hopefully. Say it?
I'll agree, but they
Yeah.
have some actual news that's specific
Oh,
to the segment in China, and that is moving some classes to remote kind of thing because of COVID outbreaks and the way they're not shutting everything down the same. They're pushing toward online stuff to a degree, so I think that's part of what's popping them this morning. I don't like that. Still, I don't know that I'll have it on the list.
yeah, yeah.
It sucks in general, so.
Yeah, I'm not a fan at all, guys. The next three could be good here. I know one of them at least will be Tesla, but let's take a look at Baba. Baba 722,000 shares traded. I do like that type of volume this morning so far. We are up 3% on this, and the daily has been a bit funky. I mean, we've been gapping up and selling down here, which we love out of Baba. But still within this range, have not managed to either lose or break out of this 94 or below this 86. A smaller, tighter range around 90, what seems to be 91 or so. So I do like this one this morning. Norm, anything out of the Chinese front or just?
Just that I mean, their leadership is talking about, being proactive in helping the economy as we get into next year. So it's the only thing I'm really seeing. Nothing really fresh as of this morning, Baba
Yeah.
in particular, but.
Yeah, I like the gap up this morning. The volume so far, 700,000 looks good, so I like that. Let's take a look at. mRNA just made an appearance here, just getting over 100,000. Again, no great volume yet. This thing has been moving pretty aggressively, but I gotta tell you, the price action and the spread have not been on my favor, at least at all, when this one. And we saw when it gapped up last week. I believe it was Monday or Tuesday. Had a nice gap up, and it's just the spread was wild, right? So difficult to stay on a pullback when the spread is 80 cents and you're 80 cents plus past your stop. It's just not ideal. It eventually did end up working out, but again, it's just you can't hold through that type of risk at times. So mRNA in play right now. We can come back to this one. What we're looking at next was going to be XBEV this morning, and they don't have great volume today. That can change, but for right now, I'll keep them off the list. Let's look at Tesla, one of our usual suspects, already 4.4 million, and a whole lot going on here. Norm, obviously, Elon taking
Got
to
a couple
Twitter
of things.
and some other stuff. Yeah.
Yeah, they got it down. First of all, they got a downgrade this morning out of Oppenheimer. I believe market perform versus outperform. So essentially neutral from hold. Or neutral, excuse me, neutral from hold. That's the same thing. Neutral from buy was
Yeah.
the rating change generally. The other thing is, I guess yesterday evening or afternoon, Musk put up a Twitter poll saying he would abide by the results, asking if he should stepped down as CEO of Twitter, and there was 57-ish%, I think, said yes, he should step down. So I guess if you're some of the concern of Tesla shareholders, him not being focused on Tesla because of Twitter could have some relief in that. We'll see if it does much.
Yeah, we'll definitely see how that plays out. Tesla right now is liking that news, up 2% with 4.4 million. And I think so far when he's done that a couple of times where he does these polls. I think he's somewhat been doing them. He's been actually whatever the people
Yeah,
vote
I mean,
on,
he's stuck by
he's been
whatever the vote
following them.
is.
Yeah,
Now,
yeah.
he can't exactly just flip the switch and throw a CEO in there. It's going to
Right,
take a little
right.
bit of time, but
Yeah. I always think
I
this
guess
guy's
you
always
could go pick up somebody off Skid Row and throw them in
yeah.
there. But I don't think you'd want to do that with your $44 billion investment.
I agree. I always think this guy's always ahead of it. He knows what the answer is going to be, and he probably has already someone lined up. But who knows? We'll find out. Nevertheless, Tesla for us is in play here, guys. Looking really good. Here's let's go to cost first. COSM, and this is a 2.2 million shares flow, so a little bit on the lower side. And again, pre-market actions 5.1 million. We're down 52%. We're down 52% from Friday's action. So it's just coming back down to reality, I think, here. No, it looks like hard to borrow. SSR. I just don't see how this is a good one today. I'm not sure what even popped it up on Friday.
Well, they had a reverse split, but as Jared mentioned, there were some other things going on there. So it was a 1 for 25. I don't touch those. I know Brian had a
I
great
remember
trade
that.
on it.
Hmm.
But yeah, the second day on these can be very difficult.
Yeah, yep, agreed. And guys, we had well, not we, but Mike and Andrew had an amazing YouTube video that's out over the weekend. If you have not seen it, definitely take a look. They're going over the top five psychology tips on there. And one of the comments that Mike and Andrew made was, that there are times when we say there's a choppy market, it might be choppy for the way me and you trade, but it might not be choppy depending on your strategy. So keep that in mind. It's a very, very good conversation, guys. So definitely go over to YouTube and check that out after the show, though not right now. Watch this first. Not really one that I like this morning. Heading down to ETNB. ETNB also down 23%, 500,000. A little bit on the lower side of things here. I'm not liking the volume. I'm not liking the price action right now, guys. So I'm gonna skip on this one, Norm, unless you have any reason why we should have it on here.
No.
Yeah, right. Yeah. So move down. AKRO. Very similar. These two in the same field. It looks like.
Another biotech. Yeah. I'm not seeing any fresh news as of this morning or the weekend on either of them. So
Yeah, they're both moving very,
there's
very
something,
similar.
obviously.
Yeah. But either way, it still does not make these look good at all at the moment. That can change if the news is big enough and affecting some things across the board here. All right, here's Meta. Meta, we are down 2% this morning. I do like Meta. I know this daily is all over the place, but it actually has been intraday trading better than what this daily actually looks, right? So Meta right now down 2%, 317,000. I will add this to my list, and we'll see how that continues to develop there. All right, more stuff just popped up into our gap up list, but they all seem to be JD's back on this list. Okay, not
Plug.
really. Yeah. Plug. Oh yes, plug is on
Yeah,
here
it's
as
dropped
well.
off.
Yeah, and it's just barely getting over 100,000. Not really in play at the moment. Yeah, we'll give this a little. And this just dropped off. Yeah, we'll give them a little bit of room here. Um, Norm, on your end, do you like anything this morning so far?
No, I need things to kind of develop, man.
Yeah, yeah, it is a quiet morning, and you can see that by our watch list. Only Baba and Meta on here, and this madness, which is just for entertainment purposes only, guys. This MDGL. All right, let's go over to the room. Let's see what you guys like this morning. Yes, I'm sure many of you like Messi this morning after what was an incredible. I mean, I never seen a match so exciting like yesterday. That was wild. That was wild. I mean, it being the World Cup, but just the way it was, it's definitely a way to go, man. Way to go for Argentina. VKTX. VKTX here, guys. Up 50%. Is this the one we used to trade a whole bunch? Not at least trade, but at least it was in our gappers list. I want to say yes, but no, I'm confused with VRTX. It's another one. I think VRTX is the one that we used to trade quite a bit. Yeah, it's a different one. Okay, so let's go back to BKTX. We got volume, guys. I don't know what's moving this. Another therapeutics company here that's up 52%, 5.1 million. I don't know. What's the news on this? Who gave me this one? Brian B. I'm not sure what the news is, but I will. It's definitely in play. Let's get the float on it. VKTX, we're moving here. 67 million shares float. Okay. Sympathy to MDGL. And MDGL is up. That's the one that's up 200 something. Okay. All right. Yeah. I mean, these pharmaceutical companies, guys, should be very careful. I don't know, that I'll be trading these. I know I won't be trading these, but definitely in play. If this is your cup of tea, this is one to take a look at. BKTX. It's probably not coming up on our list here, on our gappers list, because the ATR is probably less than 50 cents. That's the reason why, if you're wondering.
Nothing against these guys. It's just it's trading biotechs, especially trading biotechs intraday, is a very well. There's two sides of it. There's the pump and dump side of it, which a lot of people do because they move like crazy. But then it's a very to legit trade them and then not be the pump dump deal. It is a very niche thing that you have to have a good understanding of, because they can be really wild.
Yep, absolutely.
So
Absolutely. All right, guys, what else we have? So there we go. We have VKTX. We looked at. What else is on here? So let's see. All right, how about over on YouTube, guys? What do you guys like this morning? Both Nash drugs. Yeah, so they're moving in sympathy, triple D. I see that. So yeah, again, just not my style of trading. I have them both on here. If this is your thing, they're both in play today, no question. You can take a look at those. Meta is good. We have that on deck already, so that's good there. And yeah, guys, as cost SM on Friday was wild. Yeah, I didn't trade on Friday. We spoke about this. Norm just mentioned that Brian did trade this one. This is the one that had the split. They're down today. You know, they're active, but again, down 50% this morning. Hard to borrow on SSR. Not sure if this is going to give you another great trading day today. Does have the volume, does have the gap down. But again, just not the style of trading that I would like for me this morning. ABC Def is giving us NVAX. NVAX, pretty quiet. I know they had the gap down, the sell off, and then had the gap down on Friday again. They did recover from that at least a little bit from the previous day close on Thursday. But right now, man, volume is really light at the moment. So you'll have to wait for the market open to see if this is going to give you any opportunity here. Right now, doesn't look great, at least for me. Let's take a look at some of our usual suspects, guys. Let's look at Apple. What is Apple up to this morning? I know the market was up slightly, pretty flat right now. Apple doesn't have great volume. They've been on the last couple of days have not been great. Again, just following overall market action here. The market, if you look at the SPY, it is basically identical. Apple and a lot of our usual suspects have not been doing their own thing, but there is some opportunities there. If the market's going to continue to sell off, Apple is a great one to keep an eye on because it trades very well. You also have the ETFs, the TQQs, and the SQQs, and all that other stuff that you can look at as well to find some good opportunities. There's some videos on our YouTube as well, YouTube channel, on how to trade those if you're interested on how that works and how Andrew and others have traded that in the past. How about the semis this morning? Nvidia, pretty flat right now. Not much going on there. Yeah, things are really, really quiet today, guys. It's a real quiet start to this week, but that's okay. We will find something as we get closer to that 9:30 time frame. Let's go ahead and let's go over to announcements. We got a lot that for you this week, guys. That is coming up, and as I'm saying that, I don't know if I updated the chart here. I think it is updated. So let's go to it.
I don't know that we haven't used this slide in forever, man. So if you
Yeah,
would
we'll skip
throw
it.
that away, that'd be awesome. All right, every Monday night, 8 p.m. Eastern, you got Carlos doing onboarding and technology. Be sure to check that out. Tuesdays, we've got John talking about resetting your trading life tomorrow night, 8 p.m. Eastern, and then following week, next week, we're gonna make sure we're doing that, is moving averages with Andrew, 8 p.m. Psychology on Wednesday, 8 p.m. Eastern this week. Mike will be talking about the interaction between a trade book and trading psychology. And then we'll skip a week due to Christmas break, and we have our next psychology segment on the 4th, talking about gambling versus trading in the game of probabilities. Thursdays, we have mentorship with John at 11 and Thor at 8 p.m. Eastern every week. Got tradingterminal.com. If you haven't been there to check it out, be sure to do so. Tradingterminal.com, where we are building tools for traders that it's completely free. And you've got everything. People spend thousands of dollars a year on these tools, from scanners to charting to news to breaking news squawk to everything else, replay simulator. And be sure to check it out. If you're watching on YouTube and you haven't been in the room, I was going to get to this after, but we'll do it now. The bootcamp, peakcapitaltrading.com, our mentoring bootcamp. We're changing the program for 2023. We are going to greatly limit the number of applicants, have about a third or less than we used to have in any given bootcamp. You're going to have live trading in a Zoom meeting type format, Google Meet, Zoom meeting type format where you can talk and amongst each other and trade with the mentor. Be twice a week. I think it's Tuesdays and Thursdays is how that's slated out currently. Have 12 trade book meetings where you're meeting each week to discuss how to build a trade book. You're going to have personalized support with building your own trade book, group mentorship meetings in a smaller group with a coach each week, and then trade review sessions, live trading edge development webinars each week, 13 of those in total. Then you've got Thor with his dedicated sessions to tape reading in level 2, and at the end a post bootcamp continuation plan. So solid. It is filling up. It's about halfway full now. So sign up if you're interested. Don't wait. Starts January 9th. There are things to do before that date just to get started. So be sure to check that out at peakcapitaltrading.com. Then our live trading summit in San Diego, March 2nd and 3rd, 2 days. We're going to have live trading presentations, dinner together, all kinds of great stuff. 2 days in San Diego, March 2nd, March 3rd. Be sure to check it out at bearwelltraders.com/workshop. If you're watching on YouTube, haven't been in the room, use the promo code PreMarket24 to get a discount off the intro membership. It's 1 calendar week, 5 trading days if there's no holiday, which note there is next Monday for Christmas. Promo code's PreMarket24, PreMarket24. Use that and you get the discount. It's a one-time payment. And then also Holidays 50 or Elite Annual Membership discount code to get half off the Elite Annual Membership. There you go.
All right, thank you very much, Norm. Okay, guys, let's get into it this morning. Let's go ahead and see what we have going on. So right now, guys, pretty quiet. Only Baba, Meta, Apple on my list, and a couple of biotech companies for entertainment purposes only. So that is what we have so far. Let's take a look at how these are moving at the moment. We're ahead of schedule. There's not a whole lot to do levels on. So if you guys have any questions or anything you want me to look at, send it over and we can definitely give you some answers there. So with that said, let's take a look at our list here. Nothing else is gapping up on neither side of this, so that's okay. And we'll take a look at gap down as well. Very clean. Okay, levels, guys. Let's do levels for these two. And then as you guys look at any other tickers that we should take a look at, throw it out to me. We'll start with Baba this morning. So again, I like Baba here with the volume that we're getting. We've been seeing a nice sell-off in the last couple of days, still within this range somehow. But if you look at every day on here, it's been, even in the gap ups, you're getting a sell down, which we love out of Baba when it's doing that. So one of the better Chinese tickers to trade. Definitely going to have these on deck. So let's look at some levels. High of the pre-market, you are set at 89.90. We'll slam a level right on there. And then towards the bottom, the low of the pre-market is going to be at a 88.54. But in the pre-market already, you're seeing some areas here where you're finding some more support. As you get closer to 9:30, there might be one that sticks out here with a lot of support as the volume continues to come in here, if that is what's going to happen. On the bigger picture, if you look at the surrounding price action, you do have your highs and lows for the last 2 trading days. Again, still within this range here. I don't think you need to add anything else. Previous day close on there, showing that big support that we have been seeing since early December, bouncing off of that. And then you got this, as I mentioned before, you have the smaller range. This area here around 89.90, giving you a lot of resistance, a lot of support. I mean, there's out of all the 15 days that are on here, I think 10 are touching this area. So definitely worth having that area, and 89, might be 90 marked on your charts. Heading down to Meta, guys. Meta, not great stuff this morning, but they have been pretty active over the last couple of days. Again, if you guys remember, this thing gapped down huge and then has since then recovered nicely. Stuck between the highs and lows here of the last 2 trading days, and that has created also a nice little range that we're seeing here. This morning, the low of the pre-market is at 116.70, so we'll slam a level right there, and we'll give this thing a little bit of time to kind of develop for today. Again, not really a great one. Might actually be something that will sit on our secondary list, but there's not a whole lot to watch today, so we do have room for this one. Actually, no, guys, Tesla. Yeah, Tesla is on here. We talked about keeping Tesla. I talked about how much I like this one this morning, how it's in play. I just forgot to add it on to the list. So thank you guys. A few of you guys throwing that back at me. So yeah, Tesla's in play, guys, for sure. Probably one of the better ones to look at this morning with everything they have going on and Elon's tweets and all that good stuff. So right now, let's go to Apple. Apple, the last couple of days, just following the overall market. This is a good ticker to watch if you want to trade what the stock market is doing. You can look at also other ETFs, but be careful. Some of those are leveraged, so you got to be very, very careful when you touch those leveraged ETFs. Right now, once I mark down the low of the pre-market on Apple, I don't think you need to do anything else because you're set here at 134.81. That's giving you a good low of the pre-market there. And then below that, you have your previous day close, which even with all the stuff going on, we've been maintaining that level. We broke out. Last time we broke out of that was going to be around June, right? Things got pretty shaky over here. Since then, we've been on a crazy run and then right back down to this level, right? And this level seems to hold pretty well. That is where your previous day close is over at 134.51. So we're in a good area here. At the end of the day, the SPY is going to determine what happens next here in the next few weeks. Let's go down and look at some of the levels below this previous day close and the lows for the last two trading days. You do have something at 182.15 and then all the way down here 129.07. So we're ready for this, depending on which way Apple wants to go. Hopefully, we're not going to get indecisive trading or movements as far as just moving sideways. Hopefully, there could be some kind of trend that takes place for us to take advantage of. Here is Tesla, which trading very well this morning, has tons of volume, guys. 4.7 already. So Matthew, I'm with you. I'm with you. This is definitely in play today. One of the better tickers that we have on the list, and the list is not that long to begin with, but still, this is a good one. 158.20 high of the pre-market this morning towards the bottom. The low is going to be at 152, but you do have your highs and lows here for the last two trading days. Just slamming into each other at the moment, so that's okay. We got plenty of levels to go by here as of now. Towards the bottom, we did create a new 52-week low, which is this 150 from Friday. So we had a nice drop there, a nice sell-off after gapping up, just sold off the entire day there. And we're getting a slight bounce this morning. Not sure if this is going to hold, but again, some slight positive news out of the Tesla deal there, as far as Twitter and Elon and everything else. What else, guys? This is what we have on deck. I mean, not a bad list, but definitely we could have used some more action this morning. But we will take what the market gives us, right? We're not going to be picky as far as that goes for this Monday morning. Tesla's good. What else do we have? Walmart. Can we take a look at Walmart? Yes, we can. Walmart is one of these tickers that doesn't do a whole lot. It's really not on our list. It's a great swing trading stock. I know many traders, my brother included, he swings trades this quite a bit, depending how the market is doing. So it's great for that. But for intraday trading, it can be a tough one. It really can. Unless there is any heavy news, this can be a difficult one to trade. Right now, you saw the gap up we had. They have a nice little run there. We're right back down to this great area of support. I mean, resistance that can now become support, hopefully. But look at the resistance we had here at a 140. With the previous day close at 142.75, could not break out of that for a while until we finally has the gap up here. So we're back on here. That's the only thing that's interesting on this. Outside of that, you're really not getting anything on Walmart at the moment, right? The volume is completely dead. Typical Walmart pre-market activity. You have to wait for the market open to get any kind of movement on this. So, Noob Tesla is definitely the one to watch this morning, or unless you want to go really risky, you got some stuff you can look at here. You got VKTX, not suggesting you look at these, and MDGL, which are just insane, guys. Very, very careful. Manage your risk accordingly. The spread right there was $1 for a quick second, back to 30 cents, but easily $1 plus spread on this thing. So very, very careful. So these two are very active. I think they're moving. One of them is sympathy, right? BKTX is sympathy with MDGL on these pharmaceutical companies. You bring it up to SPY, Mar trades, the SPY. Yeah. Overall SPY stuff, just moving things like even Tesla right now, although they got their own thing going on. You can see the SPY has a very, very similar price action now, with Tesla popping up a little bit, SPY doing the exact same thing. And you're going to see that across the board. Apple, not too much about Meta, because Meta needs a little more volume, right? But Baba, you'll see that on many of these tickers that look somewhat alive this morning with some type of volume, as you're seeing here. Interesting fact, today's Tesla volume right now is more than the sum. Yeah, I agree. Tesla's volume today, I mean, at 4.8 is just insane. But if you notice Tesla, if you go back to Tesla, and you look at the last couple of days, right, especially when Elon started selling, and then after, when people found out Elon was selling, then you can see the volume has been slightly higher than usual, not by much, but that's slightly higher than usual has been starting with the pre-market, doing about 3 million easily by 9 o'clock, right? So if you look at Tesla's pre-market activity in the last couple of days, it looks just like this. And actually, this one is not the best pre-market activity we've seen as far as price action. We've seen better out of Tesla. So it has been just extremely active. Like, look at the 14 here. We just look at the action you're getting there. It's just tons of volume that's being moved around on Tesla, one that has been in play and given us a lot of great opportunities, guys. So Tesla has been really fun to have on deck. You got these tickers once in a while that's just, provide all the volatility and move, and Tesla is one of them. It's not the easiest stock to trade. It's not as easy as Apple or AMD or Nvidia, but they are trading well. You have to be mindful of your stop loss, right? Where's your stop loss is going to be, and the number of shares you're taking, because this thing the pullbacks can be very aggressive, as you guys know by now from watching this stock so much, right? It's been in play quite a bit. And it can be a little choppy too at the market open until it does actually settle down. Amazon, another usual suspect as well, Vincent. I don't think it's really in play. You could take your pick here. It's been trading with the overall market right now, pretty much flat at the moment. A little bit of volume there, 468. But I do have Apple on there with some decent volume. How about AMD? AMD is no volume at all, and Nvidia also pretty quiet on the semiconductor front as far as volume goes, right? So not much happening there. Bulls are going to defend 150 like their life's dependent on it. Is this on Tesla that you're talking about, Kiwi Cap? I agree. Listen, Tesla, Apple, these are cult-like companies, man. I mean, people just they will. I always say, if Tesla came out with a brick and it had their logo on it, Tesla fans would buy it. And same thing with Apple. If they came out with a brick and say, "Oh, this brick is is earthly, and if you put it in your office, it helps with whatever," they'll buy it. It's just that cult type customer base. So you get to these levels where people, man, they just, yeah, they defend it 100%, 100%. So we'll see. Apple's a big name. Apple's not going to go bankrupt. Well, I'm not about Tesla, how the way Elon's going, but people are going to eventually, even if there's more downside, they will find volume. So I'm not volume, value. They will find some value that it might be worth, buying the stock at a discount, right? So think about that. It's not, when you think about trading, don't think about just it's day trade. There's a lot more happening, with options, as Jared talks about every single morning. Kind of gives you an idea of what's happening there, because that can really help your trading as well. So it's a lot that goes on, and you got these funds and investments that look at, hey, Apple at 135, that is a great deal, right? It's a great deal for a year or two, right? Not for now, maybe not for the next couple of months, but for a year or two down the line, that is a really, really good deal. So these are things that you can think about. Again, not investment advice, but there are some stocks that are definitely at discount. And the only thing I will do is, don't buy on margins. Do not buy on margins, and it'll help you drastically if you're going to looking to hold through some stuff, for until it gets into a nice price, a nice value range, price target. When it's time to sell, don't buy on margins. You'll be okay. Margins is what kills people when they try to hold for the longer term, because that is when you can get into a messy situation. What else, guys? What else we looking at today that we like so far? Ben, I missed you here. XOM, and I'll look at Sam. I'll look at you next here. XOM not doing a whole lot, man. Only 34,000, so it's pretty quiet as far as volume. Again, just don't see a lot happening in this sector right now. I think of Oxy when I think of XOM and these other oil type companies. I don't see anything here happening at the moment. Only 80,000. Let's look at APHA, which is this one. APHA, IPA, excuse me, IPHA. Another a pharmaceutical company. But if you look at this is something that, it just doesn't fit my criteria of trading. The daily, guys, this is, you want to talk about bad daily. This is it right here. This is a really, 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 really bad daily chart. I mean, this thing is just brutal. No volume. Today and Friday and today, you're getting somewhat of some action here. 600,000 shares trade. That's the most they've seen. I mean, you combine all these days here, and it doesn't give you the last 2 days volume. So I don't know what they have going on, but be very, very careful. They're up 44%. I see that. 682,000. But again, more of a penny stock. You want to be very, very careful if you're going to be looking at this thing over here, Sam. All right, what else? VKTX, that is on deck here. I have it here. They are, look, they're coming back down to reality a little bit here. Hit as high as 824. Now we're down at 6. And this thing might lose off 50% by the time the market open gets there. You tend to have these overreactions. And this is from what I heard in the comments here, it's a sympathy play based on MDGL. So it doesn't really have its own news if that comment is correct there. So I don't know if that's going to hold up, right? Too well. It doesn't look like it's holding up here as we're dropping a little bit this morning. But again, both risky type plays, guys. If you're not experienced, I will stay away from those. If you haven't traded those in the past, if you don't have a game plan, you don't have a trade book for those type of trades, just stay away from that. It is not worth it at all. Here is JP Morgan, Kiwi Keb. I don't see anything good on it now. We might have to wait for the market open on this one. I don't see anything explosive at the moment on this. Oh, wrong chat. Okay, that makes sense. mRNA. We looked at this earlier. Very, very light volume. I know they've been moving very well as far as the daily goes. But the intraday, even on this day here, when they had tons of volume, I mentioned this earlier, I actually traded it here for a high of day breakout. And it's just, man, the continuation on it was brutal. And the volume has been dropping down since then. So I don't expect this to intraday trade very, very well. So keep in mind, for my strategy, this stock is not good as far as the price action goes, right? It's a little more difficult to read the level 2 when you have a wider spread, when you're not getting, crazy volume. It's a little bit difficult to kind of read the price action, the level 2, and when possibly a breakout is going to happen, that's going to get continuation. Because that's my play. My play is I'm looking for a breakout, usually on 5 minutes into the market open, that's going to move with continuation with volume. And if your spread is bad, and what happens is when your spread is bad, the stock tends to hop over too much like this. So you don't get the clean action like you will see on Apple, Tesla, AMD, NVIDIA when they got great volume, which makes it very difficult to time your entry. Matter of fact, on my partial here was so bad. I think my partial was somewhere, not this candle specifically, but it was a candle similar to this one. I hit the key here and I got filled like down here. How bad the spread moved, how quickly it moved, right? So it's just very difficult to trade when you have a stock like that. Carlos, I had 2 fake accounts impersonating you. Yeah, guys, be careful with that. These guys are very aggressive, not just me. Any of the moderators, Andrew's account, especially on Instagram, these guys are very, very aggressive. Both all had the same post. Yeah, what they're doing now too is, and they're matching the last impersonating account matched exactly the number of followers I had and the number of people I was following. They matched it perfectly. So they get very creative. You could quickly look at that and say, oh, I know Carlos has this many followers, so this could be it. I wish IG would do something where, they would highlight an account that gets created and say, hey, brand new account created 2 days ago. Like, throw that out there. Make it big red letters. You do that and, people will get flagged like, oh, wait a minute. I know Carlos had IG for longer than that. This is not right, right? That right there takes very little, IT development on their part, very very little, and it will definitely make a big difference. I just don't know. I mean, I'm not the smartest person in the room. These guys are geniuses. They can't figure this out, or maybe they don't want to figure it out. Maybe they don't want to figure it out. Maybe they have some kind of agenda. They don't want to do that. But man, get with the program. I mean, it's 2023 almost. Let's take a look at Neo. Take a look at Neo here, guys. Neo this morning up 1.2, 800,000. It's an ugly 800,000 though, right? I mean, this is not clean at all. Great volume, but it is an ugly 800,000 in this pre-market. And if you guys want to know more about pre-market activity, we do have courses on our education center talking about exactly what we're looking for, what's good, what's bad, and we'll get into more details. And even the daily here, guys, has been interesting. Every day's gapped up. It's gapped up every single day since Tuesday at least, and sold off. So we're gapping up now. We're gonna sell down. We're gonna sell down now to 11. What's the plan here with Neo? So I gotta say, very interesting daily. The last couple of days. We'll put it as a secondary for now. Let's see what happens there. Secondary for now. I like the volume, but it's an ugly 800,000, guys. It does need to get better, no question. And yeah, guys, and we would love your help. If you see anybody impersonating the moderators or bearable traders, just report them. These guys, the platforms, they take a little bit to take these guys off and block them. But if a lot of us, report them, it definitely does help. And just keep in mind, because it's so important, because the reason why these people do this is because people do fall for this stuff. Nobody at Bearable Trade is going to ask you, hey, join a secret society to help you make 8% like Sam. It's not going to happen, right?
Yeah.
So just don't do that, right? Don't do that.
It's tiring because it never ends.
It never ends, man.
Like whack-a-mole.
It never ends. Never ends. Like you hit one, it just multiply.
Yeah,
I mean, it just never ends. Yeah. Yeah. For those that don't know what whack-a-mole is. Yeah. Guys, we are set. Let's see what our moderators have this morning. I have Thor, Mike, and Megan with their list already. So we'll bring that over. As I'm doing this, hit that thumbs up over on YouTube. It does help us out a ton. What are we doing? We're sitting at 133 likes. Very nice, guys. All right. We talked about that once we start hitting 200, 250, that is when the bull run of the Santa Claus rally is going to start. So help that process. Help us out here. Help that process so we can get some good volatility. Last time I did that, we had members in the community run over and hit the like. Let's go ahead and disable this video. Get our mods list here, guys. I just want to remind you again, be on the lookout on our YouTube channel because a lot of great content. The last video that was put up was a really, really good one with Mike and Andrew. Great conversation. Definitely don't miss on that. All right, let's bring this over. Let's see what our moderators are looking at this morning, and we'll leave this here. See if any other ones come up. We do have Thor this morning looking at Tesla, Verizon. No, that's not Verizon. VC could be. I don't recall what VC is. It is? Okay. Right. V alone is Visa. Yeah, so that's Verizon. Meta, WBD on there as well. Mike is looking at Tesla, Meta, and then Megan also Netflix and Meta on her list as well. Jared, Tesla, Netflix, energy stocks for today, and reviewing a couple of ETFs plays there for 2023. So excellent. DTE, is that energy or something, Jared? I'm not sure what that is. XPEF, or that's SPX. Not sure what that is. Options lingo.
That's not a ticker. That's what days to expiration.
Yeah. Like I said, once I start talking option, I do the Homer Simpson into the bushes. But yeah, that's what that is, guys. Okay, excellent. Guys, we are all set. We'll wait for more moderators to come up here. Let's see if Brian's on deck. Throw out his list. We'll send that to you if he has his watch list ready. But for the most part, again, it's a quiet start right now. We can expect this hopefully to get better, but the market has been moving quite a bit, guys. So it might need a little rest here, right? Look at the last couple of days. We had a big drop. We might get some sideways action. Just be prepared for that and don't force any trades. Very, very important as we get into this week. It's only Monday. We have a whole week. We have to trade. So don't force it the first day out of the gates here. Be very, very patient. The move right now from the SPY, from the highs.
COSM has dropped from $12 to $8.30 in a 1 minute candle.
Which one is that one?
COSM.
COSM. Oh yeah, the crazy one, right? The man, see it, guys. This is what we're talking about. Be very, very careful. Not telling you what to do, but this is not even on my list, man. It's just nasty, nasty, nasty. Here's Brian, the man of the hour: Tesla, mRNA, Meta, VKTX, and COSM for fun. Right? Very clear there, for fun. So I want to emphasize that
I don't know
he's
about all that.
he's not recommending you even look at this thing. So, guys, take care, trade safe. We will see you all tomorrow. Tonight's onboarding class for those on YouTube at 8 p.m. Eastern time. So definitely join me for that. Use the PreMarket 24. You get a discount to join the entire community for 7 days. So, guys, take care and trade safe.
Yep. Take care. Trade safe, guys.